This week on our highlight reel for By the Numbers, we'll be taking a look at interest rates and could they be an ominous sign for the housing market. From there, we'll be looking at the incoming Trump administration's potential policy on tariffs. But for now, sit back, relax, and join us as we take you through the numbers. Hi, Lauren.
Hi, Lindsay.
How are you?
I'm great. How about you?
I'm good. Happy New Year.
Happy New Year. We're back with more headlines.
I know. The news does not wait for the holidays.
It doesn't stop.
It does not. But here we are yet again, kicking off a new year, new headlines, but maybe some of the same old
Well, we
news.
do have a couple of, let's call them common topics that we're coming back to, but it seems to be like this is what people care about. This is what, consumers, we've been talking a lot about mortgage rates, for example. This is top of mind for how strong retail will be. And our other headline today is a perennial favorite, tariffs.
First headline being U.S. mortgage rates approach 7% in ominous sign for the housing market. So mortgage rates are threatening to squeeze buyers trying to crack into the housing market. That's not new news. Rates are, however, at a 6-month high, according to this article, which I think some folks will probably find a little jarring.
Yes.
And high borrowing costs continue to weigh on the affordability crisis, as many are calling it.
Right.
So let's just start with maybe a baseline. What is the current average mortgage rate on a 30-year fix?
I'm so glad you asked. So we do have a chart to show.
Kicking the new year off with a chart.
You know I love a
You
good
had your
chart.
trigger finger itchy over
so
there.
ready. So our data team, who they're just amazing, put this chart together. And really what this article is getting at is the difference between mortgage rates, which we talk about so much, right? They matter so much to just how much house can I afford if I'm looking at that monthly mortgage payment versus other rates that we talk about a lot, like the federal funds rate. So
this 6.7% in the green here, that is the current
30-year fixed rate. So 30-year conventional mortgage rate.
Okay.
And, we've seen this one move around a little bit, right? So at the peak, this was close. We didn't hit 8% this cycle, but we were well into the 7s. At the low, you'll notice it's not a perfectly smooth trend. This is not linear.
Right.
At the low, we were just a hair above 6. It was 6.1% in, I believe, September was the month.
Okay.
So we have bounced up a little bit. But when I, again, kind of zoom out and look at this big trend, rates are still generally declining.
Okay.
It just isn't that linear trajectory, right? This is not moving from point A to point B. There have been some bumps along the road.
And what are we saying about the next, I don't know if there is a next crash on the horizon. Let's remove that vernacular.
Okay.
When is the next good time to buy? And is it right now?
I think right now is not a bad time to buy, honestly. And again, it depends on the home that you can find. It depends where you need to be, what your budget is. There's so many personal factors. But if you, all else equal, are looking to get out of a rental, buy a home, I think this is a good time to do it because home prices very likely between now and, the next likely crash is 2030. So shortly thereafter, we'll probably see home prices come down. The typical level of appreciation between now and the peak, you should be able to ride that out at the low. And then you have somewhere to live. So I wouldn't want to buy a home in probably 2029. That's when things would get a little dicey. But here in the near term, it can still make sense. Again, interest rates are coming down. Mortgage rates are lower than they were at the peak. They're not going back down to where they were. They're probably only going up from here by second half of 2025. So once we get on the other side of this cycle, again, mortgage rates anticipate future policy.
Right.
So once federal funds increases are on the horizon, then it might be too late to get that ultimate low in mortgage rates. Keep in mind, these are anticipating future movement.
So this next headline is U.S. companies vouched for China during Trump's first term, not anymore. So the article really talks about how businesses with a stake in China are not suddenly in favor of tariffs necessarily, but more so American businesses are no longer seeing China as this land of opportunity that I think we grew up thinking that it was. Everybody really, China was the biggest economy. And we've said that time and time again over the course of this show. And every time we talk to clients, we are the largest economy.
Yes.
The United States is the largest economy.
By a good, healthy margin.
Right.
Today, I have data through August is the most recent I have, which is a little dated, but still generally true. China only accounted for about 10% of U.S. trade. They are no longer our biggest trading partner. Both Mexico and Canada have surpassed China as our top 2 trading partners.
Which is really logical.
Makes sense being in the neighborhood, right? But it's fascinating to think, as you said, China's the biggest economy.
Right.
China's our biggest trading partner. They were never the biggest economy in the world. They were at one time our biggest trading partner, but that hasn't been true for a while now. And there are other factors that kind of go into that relationship, both in terms of importers, right? Companies who are sourcing from China, and exporters, people who want to sell into the Chinese market.
And what is China doing, or what is their strategy, or what should their strategy be to combat this?
Well, that's where we get into the kind of political wrangling that it gets messy. Now, we've talked about some kind of Chinese stimulus proposals that were put out by Beijing and how those were maybe, I want to call it like ongoing stimulus. Those weren't the just shot in the arm that the economy would need to get back to those high growth rates. So we're seeing them do some things, but it's a little bit more measured lately in terms of that domestic investment. Otherwise, I mean, the question for me is, where do we go from here? If China's story isn't the economic miracle anymore,
Right.
is there something militarily that happens? I start getting worried about Taiwan if that's the case. Again, that's far be it for me as an economist to say, but those are the kinds of queries that go through my mind that I would want to ask a political analyst on to say, hey, is this so far off base anymore?
That's a good way to look at it. And as we continue forward and we learn more, we're certainly going to have less maybes in our vernacular and more data.
I hate the uncertainty,
I know.
but thanks for working through it.
I know it's uncomfy for you. But I'm an overthinker, so I like to overthink all the scenarios, which makes this really work. So I appreciate your insights and your numbers as always. Thanks for being here today. And that's all the time we have for today, folks. So thank you for joining us as we take you through the numbers. But until next time, bye, Lauren.
Bye, Lindsay.
Thank you for joining us on By the Numbers. Remember to like and subscribe. And if you'd like to subscribe to full-length episodes, click on the link in the description below.